Ding ding. Day is done. Spy finishing out the day at 483 $400, $400, like fuck it, 40104. It's moving around too fast. Um so big rally after the FOMC meeting here, but remember that, this is largely the recapturing of positions at 400, right? And not just on the SPY, but on the SPX. Most of the institutional positioning was at 4,000, with a gap at 4017. So this gap is now filled. These positions are being rolled still. It's not over, but they are rolling these positions, moving them out, selling off the long side of these. Just wondering if the SPY does come back to. Sorry, 1 second. I'll check that. SPY does come back to reality. Do you need someone to run errands, perform basic tasks for you for minimum wage? I'll let you know, sweet and sour. Thank you so much. So with these repositioned going into the end of the week, we can start to see more downside. The Fed rate 0.75 with a 0.75 increase going forward is a raise in expectations from the 0.5 in September that we were expecting. They have said that they are going to continue with this aggressiveness until, possibly the latter half of the year, targeting like 3.5% by next year, which is, at our current rate of 2.25, a 1.25 increase. So at least two more 75 basis point hikes. And then if inflation comes in, like CPI comes in shitty again, they're probably going to adjust that up to 100, and that's going to really hurt. GDP data is tomorrow morning at 8:30 a.m. Atlanta Fed came out with a projection today of 1.2, negative 1.2%. I think we might see higher than the previous quarter's inflation, which was negative 1.6%. I think almost every point of macroeconomic data has come in at a miss, and many of them at a very wide miss. So I wouldn't be surprised if we see negative like 1.8, and a worsening of this condition rather than an improvement. We still have a lot of big tech earnings. Meta tonight, Amazon and Apple tomorrow. These are all kind of low priced right now, and this frothiness could lead to runs on all three of these if they don't miss expectations by as much as the market had priced in, which is kind of what you saw with Google and Microsoft. Yesterday. But regardless, all of these guys are going to be, lowering projections. Amazon probably will be hurt the most by the current economic condition because of their exposure to the supply chain. Apple probably the second most. These three companies, really aren't making money off of physical products, and are less affected by the supply chain. So the fact that Google and Microsoft lowered expectations is very bearish, going into the future. And then for GameStop, I'm still waiting to see some of this covering for the gamma imbalance. The rise in price might help offset some of it, but I don't think we saw anywhere near sufficient volume today to consider any imbalance covered, especially not if it's a few million shares. I would be careful selling covered calls into the end of this week still because of that. And then, also a little careful next week with ETF FTDs coming into the latter half of the week. With this choppiness in the market, especially, you may not be able to hold all your covered calls till expiration. You may have to pull them back and sell them again, when it's a little less risky, especially if you want to avoid assignment. If you don't care about that, it's not really as relevant. But GameStop's still trading 20-25% of the volume that it was previously trading before the split. This is good. I mean, it means they can turn over less FTDs through CNS, low volume periods, and lowering IV periods are very bullish for GameStop in the long term. Hopefully, we continue to see put interest come in the money, in that attempt to short us down. GameStop on the 1 hour. If we go out here, 1 second, shrink this. GameStop out here on the 1 hour. Actually looks very bullish. You know, we've hit the bottom of this ascending trend. Took us a couple tests, but we bounced off of it. You know, from a technical perspective, this would mean probably a move back to like 35, possibly a high of 36 on decent volatility. So I think, you know, the technical analysis kind of shows that we can definitely move up a little bit here. Meta earnings probably released. Looks like they're taking a little bit of a hit right now. 1 hour. Go down to the 1 minute. So tested 159 from a closing high of 169. A $10 drop. Yeah, it's getting hit hard. This will hurt QQQ into the morning. It's already hurting it right now. If we look here into the futures, we're already seeing a drop. So yeah, I mean, I don't expect any of this to be particularly bullish, right? Fuck Meta. Yeah, I agree. It's a pretty big hit. It's like Zuck might have something in his eye again. He'll be fine. All right. Anyway, I think that about covers it for today. Thank you guys so much for tuning in. I will see you all bright and early tomorrow. And for those of you guys that are holding kind of, you know, if you're holding further dated puts on the SPY, relax. You know, sometimes you got to deal with these. When you play the downside in a bear market, you have to face the reality of oversold rallies, and we oversold hard the other day. If you got out yesterday, you know, that was a good opportunity to exit and take moderate profits. If you hung in there and you still have plenty of theta, I think things will be fine. Don't panic, you know, and I see some of you doing that already. It's very unprofessional. Is August 1 further dated? Is no, but it's not as bad as holding like 729s. GME, was GME coming down hard or doing something fun? Yeah, I don't think that's like a big deal. We slipped 40 cents. All right, guys. Anyway, yeah, don't stress out. If you can and you have the opportunity to average down, you know, these high prices were a good chance to do that. Yeah, I saw Meta already. What do you call it when you insult someone while comforting them? I'm not sure. All right, guys. Thank you so much and have a wonderful night. I'll see you tomorrow.